Bollinger Bands serve as a fundamental tool for traders, adeptly highlighting potential support and resistance levels in the market. By fine-tuning the length and standard deviation settings, traders can significantly enhance the performance of this indicator, optimizing their strategies to respond effectively to market dynamics. In parallel, the Relative Strength Index, or RSI, provides vital insights into whether a security is overbought or oversold. By adjusting the upper and lower bands of the RSI, traders can customize the indicator to align with specific trading strategies, ensuring that it complements their overall market approach. Moreover, the synergy between Bollinger Bands and the RSI can lead to more lucrative trading opportunities. A profound understanding of how these indicators interact is essential, as it allows traders to maximize their trading effectiveness, leveraging the strengths of both tools. The strategy involves entering trades once prices approach designated levels relative to the Bollinger Bands, with the anticipation of a return to the mean. This method focuses on capitalizing on price corrections, providing traders with a structured approach to market fluctuations. Incorporating the RSI into this strategy serves to filter out false signals. By requiring extreme values before executing trades, the RSI acts as a safeguard, significantly reducing the likelihood of incurring losses during periods of market indecision. The practical application of this strategy can be vividly illustrated through real-world examples, such as trading Apple stock. Here, decisions are meticulously based on real-time price movements and RSI levels, thereby reinforcing the strategy's efficacy and relevance in today's trading environment. Additionally, a narrowing of the Bollinger Bands indicates a state of low volatility, often serving as a precursor to significant price movement. During these phases, traders must exercise caution, as the potential for unexpected losses increases in such uncertain market conditions. Furthermore, the importance of patience in trading cannot be overstated. By allowing ample time for the right signals to materialize, traders can make more informed decisions, ultimately leading to enhanced trading outcomes. Lastly, divergence between price movements and the RSI can often indicate a potential trend reversal. This strategic insight is pivotal for traders seeking to capitalize on price shifts effectively, ensuring they remain ahead in the competitive trading arena.